Hello, YouTube. I'm your daily trader, Ben, and today we are going to be talking about algo structure, aka ping pong style trading, aka liquidity inducement trap trading. Now, without any further ado, let's go ahead and get right into what is algo structure and how do we trade algo structure. In reality of things, algo structure is really just another fancy word for structure, right? To kind of give you guys an idea of what normal structure is, right? What people look for when it comes to normal structure is, for example, if price is moving in an uptrend, right? We constantly want to see price making higher highs and higher lows, right? So what does that mean? When price has a BOS of the highs here, right, we need to find the OB that caused this break of structure. That could either be the extreme here and or the decisional here that has caused this break of structure, right? If you want to play it safe, the best way to do it is to primarily stick to the extremes or extremity of price, right? Then again, the process repeats when we break this structure point, right? And then that creates order flow, right, along here. And that's when we can expect price to retrace back into this OB and continue the uptrend of price. Right now, the same applies for the downtrend scenario as well, right? Say we are in a downtrend, right? And we're making lower lows and lower highs, lower lows and lower highs, right? Here we need to see price consistently and efficiently have these breaks of structures, right? If we were to have a BOS here and another BOS here, and I apologize for that being so large, right? We can expect what to happen, right? We can expect that this extreme right here is valid as well as perhaps the decisional. But again, if you want to have a little bit more accuracy and a higher win rate, I would just stick to the extreme. With that being said, can we miss trades if we just trade the extreme of price? Absolutely. However, again, if you're looking for a higher win rate, if you're looking for a little bit more accuracy, I would say stick to the extremes of price, right? Of course, after this BOS here, we can then validate this extreme as well and expect price to come up, mitigate, and run. Now, what a lot of people fail to recognize is not just basic structure like I've been showing you right now, but also the algorithmic side of things, right? And this is where things get a little bit more complicated. Generally speaking, let's start by understanding what happens when price is in a range, right? Say that price is moving like so in a channel, a range, right? Generally, what we want to see is price manipulate that range and make a move higher. Manipulate this part of the range and make its move lower, right? Basically, what's happening here is price is constantly manipulating that range until it decides to distribute the price, right? What do we call this? This right here is the manipulation, right? This right here becomes the distribution. And this, where price is moving the opposite way once again, is now the redistribution of price, right? So what can we expect? When price has manipulated this down part of the range here, right, what is happening? Sell stop orders are being triggered here. Retail selling is entering into the market. And what happens is, since this is the manipulation causing sell stop orders to get triggered, market makers are going to take price the opposite direction. But now we are triggering buy stop orders. When we trigger these buy stop orders, retail buying starts entering into the market. Right? Buy stop orders get triggered, the market starts to reverse, and then what happens? Sell stop orders once again get triggered and cause price to make the move higher. And then again, buy stop orders get triggered and cause price to move lower. And then sell stop orders get triggered and cause price to move, and you get the point, right? We can expect this style of ping pong trading to occur when we are trading in a range. But now you're probably questioning and asking me, well, Ben, how do people ping pong price when we aren't in a range? Well, it's actually fairly simple, and it's something that most people just generally don't recognize right away. Hopefully after this video and hopefully what I'm about to show you right now will hopefully clear some things out about the algorithmic side of how people are trading or ping-ponging price in an uptrend as well as ping-ponging price in a downtrend. Well, from a basic structure standpoint, let's say we are moving in an uptrend, right? And we are consistently making a BOS here, a BOS here. And we know that when price comes back to the extreme, right, we can expect buying to occur because we are trading in the trend of the market. There's no question that there is a higher probability trading in the trend of the market, right? Now, where is this algorithmic ping pong style coming from, right? If we look over here, right, price has taken out these higher highs. Algorithmically speaking, if price takes out higher highs, we can expect what? A retracement, right? We understand that the market is fractal, right? Say that on a higher time frame, the market is coming from a downtrend, and this is the hourly moving up, right? Say right here, and let me go ahead and change this up for you guys, that on the daily time frame, we are moving in a downtrend. All right, let me go ahead and do it like this. We understand that based on the daily time frame, we have had this BOS here, and we understand that we must come to this extreme here, right, to mitigate to come lower. And you're probably wondering, well, here we're in an uptrend. Sure. But we understand what? We induced these highs. Buy stop orders are getting triggered right here. What can we expect? We need to find not just the highs that it took out, but some other form of liquidity in the past from this leg here for price to sweep, right? So let's say that this is some inducement, another high from the past. We need to see another area that hasn't been mitigated. This perhaps can be a wick. This perhaps can be an imbalance. This perhaps can be an OB. It doesn't matter. But we need to see price come up, sweep another form of liquidity. This high must be an important high. At some point in the future, I am going to make videos on the different highs and lows. Strong highs, strong lows, weak highs. What we have to understand right now is that we must be inducing or have induced a high. Right? Once we induce this high, we need some sort of confirmation pattern in here. What might that confirmation pattern be? Let's bring this out over here. We need to see price perhaps on the 1 minute, have a sweep, change a character, come all the way back up, right back here to mitigate perhaps this 1 minute block. And then we can enter short in this area here. Right? So that is how people are constantly ping-ponging price, right? So we can theoretically be getting in to shorts here, longs here, and we know what? We know we're supposed to be trading all the way up to here. We know these are our main buys to this POI. We know these are short-term sells just to these POIs here. It's the same exact thing for this point here. Price, we do not need to be looking for shorts until price has induced the higher high. We need to see it come and sweep some form of a strong high, right? And once it induces that high, we need to see it come and mitigate in imbalance in OB. Wicks are imbalances, so that as well. And then we can start to go short again, right? And then what do we expect to happen over here again? The same confirmation pattern I'm using for selling, I'm also using for buying. We also know, based on all this perspective, we have order flow that is entering into the market, making this an even higher probable buy than this one over here that didn't have order flow. right? What will confirm this even more? What will make this trade even more probable? Well, in this area here, I'm looking for the same thing just on the buy side. A sweep, a change of character, that mitigation on the bottom here as well, also known as accumulation, manipulation, distribution, redistribution, right? I'm looking for that same pattern over and over again for confirmation. Can you have an instant entry here? Absolutely. Instant entries are definitely doable, but just know your risk is higher, your RR is probably going to be lower, and confirmation is always going to be the way to go. Now, once we come into this daily high here, right? Well, first of all, what else can happen here? We can induce this high. We could perhaps sweep some other high in the past, right? Come and mitigate something from the past and say it traps it, right? We trap out volume here, right? Price can simply just continue higher into this POI like so. Now say that this is the daily time frame. Let's say that this is the 4 hour, right? This red line is the 4 hour. Before taking entries into here, we need to see what? We need to see the sweep. We need to see the 4 hour come and change character, come back up to here, to this banker block here, and we can theoretically start to see price start to short off again. Now within this point here, we need to see the hourly also sweep, change character, and most importantly, the 1 minute needs to make the exact same pattern. The exact same pattern is occurring on all time frames, right? The daily flips from the 4 hour, the 4 hour flips from the 1 hour, the 1 hour flips from the 15 flips from the 5 flips from the 1 flips from the second. It's all fractal. And in reality, that is how we are able to ping pong price. Hopefully, this diagram right here has opened up your mind as to seeing more than just one way of trading, right? More than one way of trading, the bullish direction or bearish direction of the market, right? These reversal points are sometimes the only point you need to have price continue down lower. Now, why? Well, we forget that what? On the daily time frame, we're still short, right? So if we decide to hedge sells here, there's still a good chance, that we may mitigate anything in here on the daily leg, right? For price just to continue the daily trend lower, right? No one truly knows whether price is going to be moving higher for a decade or, well, a decade's kind of stretching it, but no one really knows where the market is going like a week before from a technical analysis standpoint. Now, I'm sure there's some people out there that probably figured it out. Cheers. From an SMC perspective, the majority of the time we react to price, right? Meaning like if price sets up the way it sets up here, we can react to that and go short, right? Let's look at a quick example on the chart and see if we can find something that gives a pretty good understanding of what's going on here, right? Okay. Let's say that we're starting from this point here. I want to have around a 2 to 3 day look back, right? And I generally look at the hourly to identify algo structure. As we can see here, we are making lower lows and lower highs, right? I want everyone to notice the basic structure at first, right? Break a structure, mitigation, break a structure, mitigation, break a structure, mitigation. It's not until this point here we have that sweep that caused the change of direction. Well, in reality, we actually started the range here, but I'm going to get into that in a second, right? First of all, what happened? The market reset right here when we swept, right? Causing price to move down, right? We then saw and officially had our momentum shift right here. Once we had this momentum shift, we knew what? Our extreme now validates, right? We're following the money. It's basic structure. We know we can enter short in this area here. But now you're like, man, well, how do we buy it back up and then short it back down, right? Well, first of all, we have to understand that this right here is also a possibility to go short. We are not instant entering any of these positions. Like I said, right? Within this here, we need to see some sort of confirmation pattern. And once we get that confirmation, then we can trade it back down. So here, like I was talking about in the examples below, we came and induced a lower low. We also need to induce a strong low. This is a strong low. And look what happens. Price induces the lower low. It finally comes all the way down, traps out everybody here, and now price starts moving higher. Well, we know we can still continue into this downtrend because the overall trend is still down, right? And what does price do? Price comes up. It mitigates what? This fair value gap. And I'm sure within this fair value gap, we again had that confirmation pattern that has allowed it to keep moving down, right? As you can constantly see here, price is forming lower lows and lower highs, right? Again, over here, we induce the lower low. And if I come back into time here, I need to see it sweep some form of a strong low. Here we sweep that strong low, and as you can see, price traps all these sell stop orders, and price starts to trade higher. Hopefully you guys got a little bit of a basic understanding of how algo structure works. If you did, please smash that like button. Please give this channel a sub. It really does help me out a ton, and I absolutely love hearing like all the feedback from you guys all on Instagram. With that being said, if you're not following my Instagram, if you want to see me live trade for a little bit, please go follow us at seisners.trading.journal. And if you're looking for mentorship opportunities, I'm going to leave all that in the description for you guys. But if you did learn something new today, if you now have a little bit better of an understanding of how algo structure works, I am going to go make some more in-depth videos in the future. But then again, if you enjoyed today's video, if you got a little bit more of a basic understanding of what I'm talking about, please smash that like button. And then again, I'll see you in the next one. Peace.